Simple overbought stochastic swing trading tips and tricks. Simple overbought stochastic swing trading tips and tricks. We are a monthly chart of Well Tower Incorporation. The epic is HCN Hotel Charlie November. This is a Russell 1000 component, an American stock, and we want to talk about a simple overbought stochastic swing trading tips and tricks. Very simple and quite straightforward. All right, what are we looking for? We want a financial instrument to go up. Okay, so you see here it went up, and we want the price to close below the common set trend line. The common set trend line is the trend line that we draw very close to the price. See how I draw it now? Very close to the price. Now, as soon as we see a bearish candlestick bar, this one here, okay, the price close below that bearish trend line, okay, we will implement a top-down trading method to swing it down. Okay, you can see that because of this doji here, all right, this doji, normally we will prefer this doji to be a bearish candle like this one here, but because of that, we didn't have a bearish candle. Now after this one, this candlestick bar, we will implement a top-down trading method. You can see that there was another occasion. You can see here the price rally up a bit. It was quite tricky to trade this one here. So you want the price to break below the common center line, and you want to see the first bearish candlestick bar and the stochastic 833. All right, that's what I use. Stochastic 833 is overbought, and then you will implement a top-down trading method to trade it. Here you can see that the price tried to go up again. This giving a bearish trader another opportunity to sell. Okay, so here it is. Okay. All right, boom, down again. All right, so one more time you can see that the price went up from here to here, and the common center line is broken. This is the candle here. After this candle is closed, now we will implement a top-down trading method to trade it and breaking it down. You can see that the stochastic 833 was overbought, and now the price break below the common center line. We have a bearish, overbought stochastic trading setup, and then we will implement a multiple time frame trading method to trade it. When you are applying this strategy, you need to be very, very careful because, as you can see here, the price did bounce up. Always implement a top-down trading method. If, for instance, you see like this, you see this doji here, you see this candle here, it's a doji here, all right, and you are wondering, okay, I don't want to wait for the next candlestick bar, okay, you will go to the weekly chart and allow one weekly candlestick bar to become bearish. So now you see that the doji is on the edge of the common center line, but you don't want to wait until the end of this candlestick bar. You will switch to the weekly chart and use the weekly chart as your trading setup. You must wait that on that weekly chart you see a bearish candlestick bar like this on the weekly chart. So instead of waiting for the monthly candlestick bar here to close, you go to the weekly chart and you wait for one bearish candlestick bar to close. And then from that point, you will enter the trade. So for instance here, if I switch to the weekly chart, let's go to the weekly chart and see whether there was so I'm talking about this session here. So you see here, so here it is, there was one here, you see here, the second one here. Let's zoom into it. You see here, our trading setup was on the monthly chart, probably below. Okay, so here you see here on the weekly chart, okay, boom, close below the trend line. Now this candle here, am I talking to myself here? This small bearish candlestick bar close below the common center line. Now you see this rally here. You see this beautiful rally to retest the trend line. Okay, but you can see on the weekly chart the stochastic did not reach the overbought zone, but it was overbought because I recorded a video about this. Okay, it was overbought. It didn't reach the overbought zone, but it is overbought. All right, so it break below the trend line is retesting here on your weekly chart. You know that the setup was on a monthly chart, but you do not want to wait until the end of that following month to become bearish before you sell. So after you see here, it closed below the bearish trend line on the weekly chart, retested like this. Now you will use the weekly chart as your trading setup, and you will implement a top-down trading method to trade it. All right, very simple overbought stochastic swing trading strategy. So We want a stochastic to be overbought at the time when the price breaks below the common central line after a bullish price progression. All right. So here, because we were on a monthly chart, pay attention carefully. We want the price to break below the common central line, and we want to see the first bearish candlestick bar, the stochastic 8 is overbought. We implement a top-down trading method to sell it. If the signal fell, my friend, come out. All right, come out. Here again, the common central is broken. A bearish candlestick. You see, this candlestick bar is quite a long. We don't want it to be too long. This way, a little bit long. This is a good shape here. We don't want the bearish candlestick to be too long. If it's too long, ignore the trading setup. You want it to be small size bearish candlestick bar. Okay, because if it's too long, it's risky. Don't sell low. You want to sell high. Okay, here it is quite a bit long. If you want to control the risk, you may go to the weekly chart, or if you don't want to wait until this candlestick is close on a monthly chart, you have to switch to the weekly chart. This is a simple overbought stochastic swing trading tips and tricks. Price goes out from A to B. All right. Common central line is broken. All right. The first bearish candlestick bar is formed below the common central line. We don't want that candlestick bar to be too long. All right. Too volatile. Now we implement a top-down trading method to trade it. All right. Very, very important. If the signal fell, we come out. Talking about a top-down trading method, you want a weekly chart, you see that. You'll use the weekly chart for your trading setup, the 4-hour time frame or 2-hour time frame for your signal, and the 50-minute time frame for the entry. If you see this on the monthly chart, you use the monthly chart as your trading setup, the daily chart for your signal, and the hourly time frame for your entry. If you see this trading setup on the daily chart, you use the daily chart for your trading setup, the hourly time frame for your signal, and the 10-minute time frame for your entry. It makes sense? It is also powerful. This is a simple overbought stochastic swing trading tips and tricks. If you have any question or suggestion, all right, put it in the comment section, and in due course, I will be busy recording another video to answer your specific question. We are the TSTW24 traders talking about simple overbought stochastic swing trading tips and tricks.